Good evening, Ken at Tortoise Capital Nightly Strategy Podcast for Sunday night, August 22nd, 2021. So this is the day trade frame reviews. So we're going to start with ETHE tonight. So we have the 1 week, daily, and hourly triple frame here all set up. We're going to notice on the weekly two support levels, a resistance level here at the top of the RL10, and then the dragon resistance level is already broken, so this thing is wanting to test 34. By the time it breaks 34, we should have two positions in, right? And that's so 34 that's the weekly key price level. The daily is wanting around 38, and I would say around 40. So we want to have a second position in on this thing by about here. And this is looking to get long right here from 31, and so there's plus 3. And looking at about a $1 risk on the daily, so that's good. A failure below 30 would set up at least that move to 29, then to 28, 25, bottom of the dragon, bottom of the RL10. So there's plenty of room for this thing to run to the downside. When you look at this, this, and this, you wouldn't be surprised to see that if this failed and these tripwires started failing, you could see how it could get down to 2650. And on the weekly, 2650 is just right here. And you could see 20 and 17 in range on the weekly. And on daily, 18, I would say 21. And here was the last gap. So, yeah, 24. So there's plenty of room on the downside in this trade, which is what we like. So that makes this daily cluster here a critical state where it's got strong argument for big moves in either direction. So I really like this. So, yeah, getting long at 31, and off we go. I could live with that one. And I like the $1 risk. That one feels good. Straightforward. Next one up is Moderna. Now this one is really interesting. This one kind of illustrates the Kim Anderson stretch, that unbelievable move up here to, basically to 500, and has pulled back and found support at 360 on the weekly, and now is trying to make this move off that support at 360. That's really strong weekly support and daily support, because you have that cluster of support right around 350. You have 430 that you have to get through. Peak of the dragon, yeah, peak of the RL10. That all looks correct. I would treat 400 as a nice round number for support that it's got to break through. So you can't get a second position in my view, until 430. That's really the first indication that this has legs and that this is being resolved to the upside. It's got to get above that RL, or it's got to get above the dragon at 430. Which, if you're entering at 383 to 430, that's $47. So if you took, half of that or a third of that and say, if I could afford a $15 risk, then I would have 3 to 1. So he's got 383 and a stop at about 370. So yeah, that's about a $13 risk, and you're looking to get to the first reasonable upside here at 430. So that's 13, 17, 47. Yeah, that's 3-1. 1, 2, 3. Sure, I like it. I like this as the short at 370. I think maybe I could go as early as the PSAR break, like at about 373, and then try to get advantage. I'd like to be already short in there because it's going to have a real strong test at about 363. So by getting short at 73, you got a $10 move that's available. And then if that breaks, then you can be large in a big way, because now that move there is going to take you to 340. So yeah, I like all of this. This looks good. Next up is Target. Boy, that was just look at this Kata 2, another Kata 2, because you had two support levels here. A third Kata 2. Whew. God, where were you my whole life? So there's a leg, and there's a leg. So leg 1, leg 2, and now on the weekly you have this great big collapse. Notice the importance of the PSAR. And if you don't want the aggressive sniper exit, notice the importance of the managerial exit on the Bollinger Band mean, which is the red line. That protects you from a really sad face. But now we have strong support being built here at about 247. And if we get another strong week up, then that RL10 is going to curl like this, which makes 249 a reasonable stop, and that's what he's got here, 249. And so if we're getting along at 54, stop at 4. That's $5. Can I see $10 to the upside? 264 is the edge of the Z3. I think we have strong resistance in here at about 261. So this is not out of the question getting to 264, but I think I would really be prepared for resistance hitting at the round number of 260, which gives me +6 to the upside. So I think if I was long at 254, if I had a $2 stop like right here at 252, I would be more inclined to like this trade because I'd have 3 times the position size. And still, if it broke below here, if it entered and then swooped back down to here, would you really be expecting it to turn around and go, or would you be expecting it to come back here? So for me, the execution risk of about $2 is plenty. So here's 2 ways you can play that. In the frame you've got a $5 risk, and I'm suggesting maybe a $2 risk. So let's say you were risking $400. At a $5 risk, you could afford 80 shares. At a $2 risk, you could afford 200 shares. That's the maximum position size given the 2 different risks that you want to take. But you could still keep a $5 execution and just trade, or you could keep a $2 execution and just trade the first 80 shares and then keep 120 in reserve. So if this thing gets above, let's say, 256, then you could add the next 120. So that's another. That way, if this thing fails on a $2 risk, it's only on 80 shares, and you just cut it off. Whereas you're ready to slam the next 120 on pretty quickly at 256. So that splitting that purchase like that would make some sense here. That way you're small when it moves against you, but you quickly get that second part of the position in. And then the risk that you take with the second group of 120 is protected by the money that you made with 80. So then you could say, instead of 80 and 120, what if I just normalize that at 100 and 100? Yeah, that's nice and easy and a round number. That makes some good sense to me. But, yeah, I like target here. There's a lot of people that want to buy this on dips, like all the people like me that regretted missing this entire move from 110 to 270, for crying out loud. Almost a 170% move. So this significant dip is it's allowing you to buy target on sale, and I think that's what this move looks like. So I do like this. It's not even contentious until it gets above 266. So this is all tactical trading in here. So I'd like to get in that with a $2 risk, I think. Ken H, let me know if that makes sense. That was your trade. All right, next one up is Apple. So this and Microsoft have been the really strong tech plays, while tech has been kind of lagging a bit. Apple and Microsoft have been doing well, but in that pair, Microsoft has now started moving to the top because Apple has started to fall off the radar. It's starting to lose the thread. Like, it had this sell-off that Microsoft didn't, but still it has managed that 146. Oh, just a minute. Lost the audio. Okay, so we're back in Apple. Let's start over with Apple again. So Apple and Microsoft have been the tech leaders, but Apple has started to lose. Like, it had this sell-off here in the last week that Microsoft didn't have, but you still have to respect the rising lows that it has put in on the weeklies, and I think look at this as a strong, stable base that it's put in. And so with that in mind, you got a strong RL10 and Dragon support, but I like this at the belly of the Dragon, and we're looking at about a 0.7 risk. So can we to the top we can see to 150.50. That's $2.40. So compared to a 70-cent risk, we have 3.5 to 1. So that tests out nice. 1, 2, 3. So that tests out really well. So I like that one just on the basis of it's Apple and tech. So on the other hand, I do like the short side on this one, but under the following conditions. If we saw the S&P weak, and if we saw XLK worse, and then Apple worse than tech, worse than the S&P, then this is a great short right here, because that will be people that are trying to save the gains and who don't want to see it go down to 125. So they're trying to protect $25 worth of gains. So if you could get short right here and a second position here and a third position there, that could be very lucrative in Apple. So I wouldn't do that in Microsoft because it's held up better. All right, next up is Goldman. The financials, including Goldman, have had, 2 periods of doldrums. In both cases, that tension was resolved to the upside. Ken got a piece of that already. It's right at the RLXD, so 400 is kind of a crucial price limit for it. That's this one right here. It has to get through 400 for this to continue to work. So if we get long here at 396, this is clearly tactical trading space. All right, so if it does break up and then starts to fade, you got to cut that one fast. It has to get through this price level and then this price level at 405 to be have a sense of relaxation. So you got to see above 405. It's got to get out of the river to the far side. Then you can start thinking about 410, 415. And so on. So I kind of like this one because if finance is going to work, you got 1, 2, 3, 4, 5 big chunks up to the previous swing high, given that standard risk box right there. So I like that. So you got like a 5-to-1 is justified. Then this one on the short, I think is a no-brainer too, because you have this very thin support level. It really wants to get right back into this. That's where the target is around 380. And so that's from 390, that's about a $12 stop. And if you had even $4 of risk, that's a 3-to-1 on the downside, 5-to-1 on the upside. Perfectly postured. If Goldman starts failing, boy, watch that whole financial sauce start to look bad. So that would actually be a derivative trade of this one. You could look at FAZ to take advantage of any weakness in finance that would be triggered by weakness in Goldman. All right, so here's Squarespace, the financial disruptor. And, this is a pure trader because the disruption zone was in here, and now it's done nothing but oscillate. The latest oscillation was better, but remember, it's come back each time. It has come back into the fold here at 250. So 250 is where it wants to go. It wants to come back right here. That's the demarcation line between this sell-off and this breakout, 2 legs up, and now it's come down to here. Now, if this holds, sure, then that's a clear leg up, and then you think it can get to 280, which is why I like that, because you got from 265 to 280 is $15, and you're looking at about a $3 risk, and that's a 5-to-1 on a daily to go up and test here. Even the top of the dragon is a 4-to-1. So you have plenty of room on that one. So if this continues, then that looks like it's strong support, but that's also where you want to be. You want to smash that on the short. Where would I add a second position? I think it has to get through this. So I wouldn't be looking for a second position until 272. So that gives you $8 of tactical trading room, and with about a $4 risk down in here, that's fine. So second entry here at 272, and then you're looking realistically at 285 to the upside. So I like that in both directions. Good work. TX, the steelmaker, is up next. One, two, 3 legs up. So this has already had an extraordinary move. It rolled over at 57. Now trying to find support in here. You notice Ken had some nice trades in through here. This great big gap and run all got collapsed in here. So now we're checking the strong support at around 51. So if this can hold, that gives you $1.50 of risk, and you're looking from 52.50 really to about 55. So that's $2.50. That's kind of stretching it on the 2-to-1. So I think I might have to play the RL10. I might just take half that as my execution risk because you got a very strong resistance that has to fight through here. So I think I'd be starting this off as an intraday and make some money on it. Then if it closed well, I could hold. But I would start that as a day trade first. Then if that fails, I think the weakness brings it all the way back here, and that has the potential for a short trade as well. And so you want to be watching XME and SLX. That's the metals and mining, and this is steelmakers. And then you could also watch U.S. Steel, Cliff, Nucor Steel for sympathy. But this one has possibilities. But that's a real tactical trade right there. The risk reward is not great. SOL, this is a tech in the tech sector. Low cost trying to establish a support base in here. Yeah, that feels reasonable. That may have been bad. That was bad earnings. So the fair value feels like it should be in here, around $7.50. So you're playing for $1 of gain, and you've got about 25 cents of risk. So that gives you a 4-to-1. That seems cool. Yeah, $7.50 is your target from the daily. That's the PSAR flip. The only thing I'm worried about here is that the weekly has not been favoring this. It feels like it's running out of steam. So this was the last gasp of people that were trying to push it up there at 7.9. That was this. After a period of chop, made a run to $8 and then collapsed to $6. So that's not a vote of confidence. Each one of these represents a failure of belief. So that's had 3 big strikes against it. So this one just feels like a tactical trade to me. This is not. I would not be a strong believer in this one. But having said that, if you're long at 650, you're really hoping to see it get above, really like 670. Before you can even breathe a sigh of relief. But you got resistance. Man, this one just looks like heavy sledding to me. Nothing else would have to be working for that to be attractive to me. It doesn't feel like it's done putting in a bottom yet, is what I would say. It tried to put in this bottom around $8 on the weekly. Nothing. And it's still failing out of there. Unless you know something I don't know, that is not promising. All right, next one up is XOP Oil Exploration. That's gotten smashed twice. But unlike that last one, like this is being such a broad sector, people are always interested. So there's strong resistance and trading range in there from 81 to 83. And then this little gap, this was just free fall down to 72. So if you can get this one right here, if there was a sudden resurgence in energy, and it had 2 full days to fail further, and it didn't, so the bottom is in. I love that one. And with about $1 risk, and you're looking for the Bollinger Band mean, Then the far side of the river is right in the middle of this cluster. So 77.5 is in range. So that's $4.50 of upside. You're looking at $1 risk. So that's 4 to 1. That feels really good. And then this 72 is the logical short. Yeah, I love that one. All right, next up is the Russell. It has been just dead money from the start of the year, from January to August. It has done nothing but go from 215 to 215. So dead money. And all of the movement is to the upside to 230. So what that says is that a move to 230 would be natural and normal. There's nothing, this is the edge of normal. So you could definitely see a move that goes from 215 to 230, so that gives you $15 to the upside. And you're only risking $1 here, or $2. So that's a 7 to 1. Now, realistically, you have this resistance to contend with, so call that 221. And you're entering at 215 or 216. So that's about $5 on that first leg up, and you're only risking 2. So that's 2.5 to 1 just to get back here. I wouldn't put the second position on until it cleared 222, the hump of that dragon. So that's really where I think that, that second position should be. I could, intraday, if you were trading on 1, 3, 5-minute charts, I could see a second position at 218 because that should go pretty fast. If it can clear that resistance, clear this resistance in here. I think 218 on an intraday basis. I could play that. I don't hate that. Next up is EFA, the Euro-Asia blend. This has been drastically underperforming the U.S. large caps, and you can see that last week the U.S. was not bad, but the globals were just horrible. That global instability without a U.S. shield, there's some readjustment here, but you have a nice gap to cover. So if this breaks out, you feel like you can get to 80 and a quarter pretty fast, and you only got 50-cent risk, and that's 75 cents. It's 1.5 to 1 to here. I think you got to have the stop here for execution. Like, I wouldn't let it come all the way down here. And if this thing failed through here, and if the U.S. was weak and EFA was worse, I think I'd be short at 79.25, not waiting for it to come down here. I think you want to get that sooner. Then that makes this 1, 2, 3 scoops to the upside. I like that better. And that's only 25-cent risk against a 75-cent gain. So that gives you 3 to 1. I like that better. Next up is Nike. It's had a terrific run on the weekly. It broke out of this 135. Here was your supported summer crossing. Here was your Z3 pinch breakout. Nice big gap to love at 150. That was this gap. Great kata 2. Very orderly exit here. Now it's trying to find support at 165, which is above the peak. So what was once resistance could now be support. So 165 is support. I think I would take this one right here instead of giving it that whole box. I think if this starts working, you should expect that to go and to close that gap fast and then get to 170 and a half pretty quick. So that's $2.50 to the upside. This would give you a 50-cent risk. That would give you 5 to 1, whereas the full $2 doesn't really give you a legit shot at that. Otherwise, you got a small. Well, if you use the wider stop, I would still use this like at 167. Like I wouldn't get in and then watch it roll over, and then wait to come all the way down to 166 to get out. I'd cut that at 167. And the reason for that is, look, if I'm risking $1 and I can have 400 shares, but if I'm risking 50 cents, I can have 800 shares. And the price 167 is where I want to get out anyway. I cannot have the same dollars at risk and twice the position size. So now if this works and I get a 2-hour battle drill, I'll make twice the payoff with no additional dollars at risk. All right, next one up. There's the cues. All right, so the cues on the weekly have been kind of in the doldrums. While this was going sideways, you had XLE, XLF, and XLB leading the way. But now they're starting to roll over, so tech has actually had a little bit better of a run here lately. Let's see. 1, 2, 3 entry, so we're looking at this. Now here's the trading range, but I can't tell from this graph where you're. What I need you to do is take a look at the 7 questions of standard trade framing. Okay. And what I need you to do is go through those and figure out, well, from here, which way do I want? The first question is always, well, which way do I want to go? I'm ready to go in either direction on this one because the market is at an all-time high, but this has kind of gone sideways, so I'm ready to play a breakout this way, but I'm also ready to play a breakout that way if it broke below, say, 132. So my range would be a little more narrow than your box, I think. I think I'd be using the bottom of the RL10, like at 132, which would be the PSAR break on this one. So the daily indication is 132. So that's where I want to get short on the daily. On the hourly, where do I want to get short? I want to get short right here at 135. So intraday, I want to get my first position short right there. And my target would be to come down and see as it tests 132, if it falls through, then I'll get a second position. Then if this fails, I'll get a third position. And then I think I'd be happy with that. All right, now to the upside, where do I want to get long? Well, I think I want to get long right away. I could think about a position here. That's really the same as this one. And then the next one I think would be 139. So I don't know that I want to add a second position that early. And in fact, I'm pretty sure I don't. All right. So I would just play this one with first position here. Let it clear all of this junk, and then get a second entry above 139. Now that's good because now I got two positions long at 139, and by the time it hits 140, I got two positions long and strong, and then that's an all-time high, and that feels pretty good. But by the same token, I'm getting one position short here, a second one here, third one here. So that's my take on tech. Now, what I really would want to see on the short side, if it's the short side, I would want to see SPY down, and I want to see that better than the Qs. So I would want to see, even though the market is weak, I'd want to see the tech even worse, because that would indicate that tech is pulling it down. Then that makes these really good short positions, okay? The upside would take care of itself on that one. The financial bull, and you can see this one has had more of a swing directional basis than the Qs did, but also it's better on the weekly. So if we go over here and look at the weekly, we had this beautiful run up, a very orderly pullback to the Bollinger Band mean, and then a recovery, and it's already made it through the dragon at about 115. So here was one. This was about 115. That's where it broke through the weekly dragon right here. That's a very good sign. That's this one. And that equates to this gap on the hourly. So nice strong move. Troublesome pullback, but solid support at 112. It's already got the SSC. So I think, yeah, I could be long at 118, and my risk for me would be, I'd have my risk at 114, so that's $4. Now, can I see $8 to the upside from 118, so 126? Can I see a move up into here? Yeah. It has to get through 121, which is a $4 gain, and then there's another $4 up to there. So yeah, now you could make a decision on whether you add a second position here or wait for a second position there. I'm agnostic on that one. I think I would wait. I would wait to see 126. On the short side, where can I get short on that one? I think if this were to roll over, yeah, I think right at 114, because I want to be short there because I'm going to add a second position at 112 because I feel much better about that one. So this is FAS, which is 3 times the financials to the upside. FAZ is its counterpart, 3 times the financials to the downside, so you could get the same trade. But at 112 would be my trigger, because if you look at this, you just say, yeah. That thing's collapsing down to here, 102. And if that fails, ooh, Katie bar the door. The next support is here at 70. Maybe even this one, 90. That would be miserable. All right, here's a new one. This is Susan's first trade frame, and it's a good one. So this is 3M. Now, what I'd like you to do is do the 3 time frames, because you'll see that will help you learn to look beyond your own specific target. So this is the daily. I'd like to see you add the weekly and then add the hourly and see what we can see. Now, what I do love about this is that you got a strong, there's kind of a strong channel in there. You can almost see that in the where the river is too. And this thing has had a 5DD, and it held at the Z3, and so a mechanical entry at 195 with a mechanical stop at 193 would be a $2 risk. And could we see one? It's 2R just to the Bollinger Band mean. That's good. Three, 4 to the Z, essentially the Z2. So I love that to the upside. I would take this on the short side in a heartbeat. What I would like to see as confirmation of that would be I would be looking at XLB, XME, maybe even XLI, the industrials. That's industrials. This is metals and mining, and this is basic materials. So it already feels like it has broken. You know, if this breaks, you know, it's breaking through the previous Z3s. What you want to add on, let's see, do we have the RL30 and the RL10? So I want you to add the RL10 to this. This is not correct. That's what was so funny. Your dragon should be 10, 0.5. Otherwise, it's too much like the river. So you need to change that to a 10. All the other things look correct. So you want to add the RL10, and then you want to fix the dragon, because those are the 2 primary timing indicators that we're using. So you want to, and I think you want to add the PSAR. But on the basis of that frame, that's very tradable. Why does that look strange? Something on that dashed red line does not look right. I'm not sure what that dashed red line is. Because, yeah, this red line is your Bollinger Band mean, which is correct. But I'm trying to see what that dashed red line looks like. Is that maybe that's the, yeah, so you want your RL30, make that the color of black so that it doesn't confuse with the Bollinger Band mean in the middle. That would give you a standard color coding. But I do like the basic frame is perfectly sound. The far side of the river gives you a 4-to-1 If that 5DD works, it should get back up here to 200 pretty easily. And then you could perform the 2-hour battle drill at that point. So I like that. That's good work for the first train. All right, so this is Cliff. So we've got the weekly, daily, hourly. Is Luke on tonight? Let me see if he's on. No. All right, good solid support is forming in here. I like that as the entry. It feels good. That feels correct. And then you got 1, 2, 3 are to the far side of the river. 4 would get you to the test of the top of the dragon. I think this is where I could add a second position. I would trade this as a single position to here and look to add a second here and then a third there. I like the short because now this thing is going to come back and test support there. And you can see because of the gap, there's no support back here within sight. So the short side trade on this one is no-brainer. Feels good. And I think this is the last one. EWZ. This is a perfect 1, 2, 3 entry. Something that violated hugely down to the Z3, but then held support twice. And now you can see this is actually an owl entry on the hourly. So that's a no-brainer. And you can see that it should get to here or to here and to here on the way up. This is where I think I'd add a second position. I would trade this as a single position, even though he's got, if you're trading on 1 and 3 minutes, yeah, but if you're just trading the hourlies, I would let that thing prove to me it could get through this before I put a second position. But if you're trading intraday, like with Hybrid Frog and Rapid, then that works okay. And then I think I like the short side trade. If that breaks, yeah, you want to be short that one. So good work. All right, guys, great work tonight on the charts. Got some homework to do, and we'll get this published and posted in the usual spot. So take good care.